Good morning. You're watching the market right here on ET now, and the morning after is here, 20K. That's a new reality on the Nifty.
Yeah, it's just such a great feeling. And you just think about it, when we started the year, the general assumptions were, okay, this is going to be a lost year, nothing's going to happen this year, there is war, there is high inflation, rate impact, macros are just not on your side. What do we have? You've just managed to climb the wall of worry. What were concerns became the triggers, and the triggers have now become tailwinds. Frankly, what makes you feel special is not that the world is going through a rara bout of liquidity, unlike 2021, where all asset classes were rising in sync with each other. India is the only major market which is sitting at an all-time high. None of the other major markets are anywhere close to an all-time high. That's the point I just want to bring out. Maybe if that data is ready, we'll pull it up also. That India is the only major market which is at an all-time high. None of the other major markets are anywhere close to that all-time high, including the comeback in tech, in US tech. So you are at a pedestal positioning, you're enjoying lion's share of market attention, you're enjoying lion's share of global attention, you're outperforming irrespective of what is happening in the world. So if I have to just say, well, where's the wood here? Touch glass.
Touch your forehead also.
Yeah, touch wood. But, it's just been incredible. It's just been incredible for Indian markets, for the believers. And what makes you feel very happy and excited about the fact is that, Rise with India, a theme which we've always endorsed on ET now. And this is the bull market which really belongs to the Indian. Typically the old bull markets in India, Indian investors have always sold, FIs have always bought. Cream. So in this bull market truly and clearly belongs to the Indian investor. Look at the SIP numbers. So for me, I think for all of us here, it's a special feeling. Why? Because not only you are outperforming, yes, you are sitting at 20,000, but the wealth creation for the first time, I guess, has been in a sense universal, and it has been very widespread, and it truly belongs to the Indian investor.
Oh yeah, absolutely. In fact, let's just get you some data points. While we've managed to finally catch up with the broader markets, we've managed to gain for a 7th consecutive session. It's the longest winning streak that the Nifty alone has had since the month of July. It's Reliance, private banks, which have actually led the gains. And if I just look at the contributors since August 31, it's been HDFC Bank, which has actually contributed about 90 points to the Nifty move. It's L&T with a 51-point contribution. It's Reliance, it's Infosys, and it's ICICI Bank. So it's the bluest of blue chips which have actually led to this bump up.
Yeah, large part of the engine move, I think, is coming from HDFC Bank, and that is what I think you were waiting for.
The big underperformer.
The big underperformer. Now you got to ask yourself what happens. See, we have been in this giant range for a couple of weeks. And typically when markets after a giant range, if they come out on the upside, and if there is momentum, and if there is inertia, and if there is participation coming from heavyweights, then you will not stop here. So while everybody will tell you that, okay, 20,000 is just a number, when we will look back, the significance of that would be just a day of celebration and a moment of glory, because it was a landmark number. But in the short term, when I say short term, in the near term, what happens now? 20,000 and no more? No. I think 20,000 and lots more in the short term. Historically, what I've learned, and Kunal and Nuresh will throw more light on that, is that when you come out of a giant range, and after a giant range, if you are making a new high, you are likely to just sustain that. And now the naysayers who never believed that Nifty would actually see a breakout so soon will be forced to make a comeback. So the positioning of the market a couple of weeks ago was still net short. I think the net short positioning will change. Short sellers have started covering the positions. The long build-up has just about started. So Aisha, what makes me bullish are a couple of factors. A, typically when you come out of a giant range, the market will gain for more, market will sustain. B, the positioning of the market is such that for better part of August and early part of September, there were no believers. Yeah. The general view was that Nifty in a range, small and mid-cap stocks are reaching a euphoric level. Short sellers were there. The short sellers now would be forced to cover their positions, and that's what's happened in the last 2 days. And the third and the most important ingredient in the melting pot is the bank Nifty. Yeah. So unlike the previous highs when you've had a sustained momentum. This time, indeed, the market has managed to climb the wall of not worry, but the wall of disbelief.
Oh yes, indeed. So Nikunj, where's our treat? Where's the cake? Or what is it that you'll be giving us today?
And you see, invited everybody. None of you came. Hashtag lives there only.
Convenient. Okay, let's in fact just take stock as well as to how the markets have moved from those March lows, because it has been fairly commendable. The fact that the Nifty has gained something like 18%, no one would have thought, as Nikunj said, the narrative was very different just a few months ago in the mid and the small cap indices as well, having gained close to 41 and 49% respectively. And Nikunj, just to reiterate, you were talking about the kind of flows as well that we've witnessed, the kind of change that we've seen, and it's been the Indian markets that have been in isolation as compared to the rest of the world.
Yeah, I mean, that's the interesting part, isn't it? I mean, that's really is something which is just an indication, like we discussed, that Indian markets are enjoying what could be called as a pedestal positioning. You're enjoying what could be called as an outperformance, like never before. So it's not like 2021 where there was a gush of liquidity and, from commodities to equities, everything went higher. If at all, in last couple of months, liquidity in the global financial system has contracted. If at all, we have seen the strength in dollar index, which has not impacted a market like India. So India is outperforming both on a relative basis, on an absolute basis. So for me, that is a talking point that we are no longer dependent on the FI flows. This kind of a stark outperformance, let's see if it's going to sustain beyond a point right now. While I continue to worry about what's happening in some pockets in the small and the mid cap stocks, but that is not going to cast any shadow in terms of where the positioning of the benchmark indices is. I think it's time to change gears, if you frankly ask me. It will not hurt if you book some profits in micro caps and small caps and book back to large cap stocks. You don't want to be bearish, but you don't want to be extra naive in terms of committing your capital to small and mid cap stock. Sometimes you have to rotate your capital. So I think time to rotate your capital from small and mid cap stocks back to large cap stocks, and especially banks.
It's a good time to trim your portfolios, as they say, that maybe you want to ease out from the highly leveraged plays where you made phenomenal returns within the small and the micro caps at least, and allocate some portion of that to large caps, or wait it out for when the market does see a dip and you can allocate it then perhaps. But a lot of data points as well to look out for. It continues to be CPI, which is on our radar. We're looking out for steps to perhaps curb inflation. The August estimates are about 7.1%. And remember, July you saw a level of about 7.44%. 20% of duty on parboiled rice exports, sale of rice in the open market in lower quantities, imposition of stock limits, etc., is what we're looking at. And it surprises me that it's not crude that we're talking about. It's your basic atta dal chawal, and that's become crucial to the inflation this time.
Yeah, and that is more sensitive. I'll tell you why, because that's the CPI inflation which everybody cares about. I mean, when the kitchen talk becomes more like a dining table talk, it just tells you that, where the inflation seems to be hurting now. And, given that there are state elections and there's an election next year, bijli, pani, atta, dal, everything seems to be going higher. And there is very little Reserve Bank of India or any regulator, any bank can do minus, using some liquidity tools. You've seen tomato prices. They went up, new fresh crop comes in, tomato prices, they come down. So 2 days ago, Reserve Bank of India has indicated that the ICR, they will be pulling it out in a measured manner. However, if the inflation number continues to be sticky, whatever the mathematical interpretation is, I think you actually will see more and more curbs coming from the government side in order to bring agri-commodities down. So if you frankly ask me, the impact of inflation, the only way I see more and more counterbalancing coming in and more curb measures coming in, it really would be on exports, a banning of exports, maybe government free stock coming out, maybe something in terms of import restrictions going away. I think that really would be the tone and tonality in terms of where the government action is likely to move, because this kind of an food and vegetable inflation is something which is going to hurt everybody, and it is going to hurt not only the mood point, the economy, the consumer. The level of dissatisfaction suddenly is high when you see tomato at 150 and onion at 120.
Yeah, you certainly don't want the vegetable prices moving at the hectic pace.
It's not the taste you enjoy, right? It's a very bitter aftertaste. 150 rupees, and if you tell me to enjoy.
Yep, it's a bitter pill to swallow. But yes, the market certainly created history at fresh record highs yesterday. Let's connect with our chartists to find out their views as to what the next critical levels are for the index. We've got Naresh Mirani joining in at the moment. Naresh, Naresh, hi there. A historic feat for the Nifty, 20,000 on the screen for the first time ever. Given that we're now perched at fresh life highs, what is it that you're watching out for in terms of the next level that we're likely to conquer?
So the first expectation is ideally if we've hit a new 52-week high on the Nifty. We've crossed the recent highs and we've also made the flag breakout. Ideally, a target price comes closer to the 20,400, 20,500 band in the short term. For now, going forward, 19,600 to 800 becomes a support. So the view is we go slowly and steadily towards 20,500. Same is the case with Bank Nifty. We go and test a new high going forward. What is interesting is in the move, we have started seeing some bit of participation of large caps. We are yet to see some of the heavyweights like HDFC Bank and Reliance Industries come back to their previous all-time highs. But we've started seeing an Axis Bank hit a new all-time high. Some of the other names in the PSU basket hitting a new all-time high. So overall, the trend is positive. The momentum could increase if we see much more participation. But banking as a space could be interesting in terms of participation, because some of the names, at least on the lower weights of the banking space, have started hitting new highs, Axis Bank, IndusInd Bank, etc. So the view is positive. Keep holding on to the longs and ride on to this move.
Naresh, do you think it'll be the usual suspects which have actually contributed maximum since August 10, HDFC Bank, L&T and Reliance?
So HDFC Bank could be the surprise in terms of participation. We've seen L&T make a decent enough contribution. Reliance has just bounced back from 2,400. It is still away from an all-time high of 2,600, 2,650 on an adjusted basis to Geo Finance. So overall, we are yet to see the most heavyweights take that leadership. We are at an all-time high thanks to the moves across the whole Nifty 50 basket. If we look at what has happened with the Nifty 50 equal weight, it is at least 3% higher than the all-time high. You have the Nifty 500, 3-4% higher than the all-time high. Same is the case with Nifty 200 or even a Nifty, say, total market cap. So we are yet to see that momentum, and that's the reason if we see that move happening in a HDFC Bank, Reliance Industries, ICICI Bank, the 3-4 heavyweights, we could go towards the 20,500 mark.
All right, let's bring on board Kunal as well, who is joining in. And Kunal, was it because you were celebrating last evening that you're a bit late today? Because yes, there is reason to celebrate with that print on the screen. Did it come as a surprise? Because you said this week and then it happened just yesterday.
Well, it didn't come as a surprise, frankly, Avan, because the markets were building on to that momentum. It was a matter of time that we would probably break past about that 20,000 mark. Now, the most interesting aspect is that the list of stocks compared to the previous high in 20th of July, when the Nifty was at 90,900 mark. Interesting set of names. NTPC is up 26% on a relative basis as compared to where it was on 20th of July. You have Coal India, Adani Ports. These stocks were huge underperformers in the last 2 or 3 months. You have names like Maruti, ONGC. All of these stocks have made a dramatic comeback in the last 2 months. Now, that tells you the texture of the markets, that we are not heavily dependent on the erstwhile sectors. In fact, the 3 sectors which had outperformed was auto, FMCG, as well as Bank Nifty to a larger extent till the Nifty was at 90,900 levels. But in the last 2 months of this dip down 700 points on the Nifty and then climb back above that 20,000 mark, you have all together new stocks and new sectors which have made a good comeback. So I think that's the texture of the markets, which indicates that this is a sustainable move for the index. Now, we compare with the previous times when the index breaks past a new high, what happens? And we've seen an average climb of at least 600 to 700 points on the Nifty, which means we should probably be heading towards 20,500 to 20,600, possibly in the next couple of days.
All right, let's find out those stock-specific calls as well then. And Kunal, what's looking interesting today on the charts?
So 2 buy calls which I would suggest. NTPC as the first stock, which looks very attractive at 240 odd levels. So would suggest a buy with a target of 255. Stop loss could be kept at 237. And Maruti would be the other stock. So from the auto pack, the stock has gained momentum, confirmed a breakout yesterday above 10,500 mark. So would suggest a buy with 10,850 as an immediate target and stop loss at 10,350.
Naresh, what are the stocks that you'd recommend this morning?
So first is a buy on Axis Bank. The stock hit that 1,000 mark, a new all-time high yesterday. This is the 5th attempt, a classical breakout in the making. Out here would expect a move towards 1,080, stop loss to be kept at 978. Second is a buy on Pearl Enterprises. The stock has seen multiple attempts around the 1100, 1120 mark, and after making that huge recovery from the bottoms, it started a trend at 900,000, a classical higher top of a higher bottom formation here. In the short term, the breakout is done, expecting a move towards 1240, stop loss at 1100.
All right, those are the top technical recommendations being flagged off by our chartists. But Anisha is here and she's here to talk about a lot of stocks. So let's get started then by discussing the FMCG major HUL and talk about what exactly the brokerages are saying, because it seems to be across the board a thumbs up.
It's a bit of a thumbs up that it's status quo, but I'm reading it as a bit negative given the fact there's been no improvement and they're saying that the margins are likely to stay flattish in the coming quarter. So channel checks, that's what the brokerages have done and what is the note they have come out with. For instance, you have UBS saying that the heightened regional competition may impact the pace of volume recovery for HUL going forward, and what they'll have to do is to protect market share is probably cut down the prices to push that volume, and that might be just negative for the margins. Bank of America is also saying that the revenue growth would now be volume led as pricing is actually tapered off, and they are expecting a 4% volume contribution in the second quarter. Citi believes that consumption demand trends in Q2 remain challenging. The rural markets are likely to recover, but they haven't recovered yet, and variation of monsoon could play spoil sport, and they are seeing near-term impact from rising competition. So I'm reading it as a half glass empty because it seems to have a bit of a negative connotation in terms of the rural recovery being pushed, competition being high, margin accretion not happening. Nikunj, this is one space which hasn't done much. We were expecting that probably that turnaround will happen and we'll see a bit of a spike in margins, but still looks like it's going to get pushed by another quarter.
See, Nisha, HUL I think is the most underrated stock and the most underappreciated in terms of what they've managed to achieve. Now you cannot look at HUL in terms of okay this quarter, that quarter, ये quarter में क्या होगा, अगला quarter में क्या होने वाला है. Look at the trajectory of their margins. At a time when they had this giant disruptive company called Patanjali, HUL has managed to increase their margins by about 5 to 6% in last couple of years. For me, that trajectory is important. Second, they've done fantastic acquisitions, and B, I think they managed to gain market share. Now at 55 times, when the bent of the market typically is in mood of moving back to railways and defense and manufacturing, a stock like HUL will underperform. HUL typically does well when either there is absolute real growth or margins will expand largely because of a sharp drop in commodity prices, or the margins or markets are in the defensive mode. None of the factors are at play. Right now markets are going towards growth stocks, whether it's railways or defense or whether it is what's happening in the manufacturing space or banks. Then the margins and the commodity pricing, they've again spiral up again, so that margin tailwind is not there. And third, there is no bumper volume recovery in the near term which will justify that a stock at 55p multiple will outperform in the short term. So while we may dismiss HUL this quarter, that quarter, if you're a long haul guy, you've got patience for 3-5 years, please don't send HUL. I think in 3 to 5 years, if the stock does not do any time-wise, it gets into time-wise correction, on 1 year basis, it will start looking cheap. 2 year basis, it will start looking very cheap. So don't sell in your portfolio. But in the near term, I think I would subscribe to what you've just flagged off, that the triggers are not there. Typically, stock like HUL will do well when volume growth is very strong, whether it's inflationary or non-inflationary, which happened post-COVID, or commodity prices are down, which they are not, or the market is in defensive mode, which also is not at play.
Clearly not defensive at all, the market. But you talked about how you have to stick to the long term and probably reap the benefits of patience, and that is something that has happened in ICICI Bank. Of course, the stock wasn't doing much for the longest time, but since the appointment of Mr. Bakshi, which had happened in October 2018, the stock has tripled. The reason why we're of course talking about ICICI Bank today is the fact that the reappointment of Mr. Bakshi has happened for the next 3 years. So that uncertainty is out of the way, because of course after that entire debacle of Chanda Kochar, it was in a limbo at that time, and he was the one who steered the ship there. And even in terms of fundamentals, we have seen that ICICI Bank has been working a lot to improve its retail franchise as well. The segment has registered 23% growth. We have seen it has highest proportion of one of the highest proportions of retail deposit, strong CASA mix of almost 43%. And more importantly, its stock hasn't done much in the recent times. What's your view on ICICI Bank, Nikunj?
So, if you frankly ask me, markets were really not worried about Mr. Bakshi's extension. I mean, that was not the talk of the town. It was not like, okay, for example, what happened in case of IndusInd Bank, or there was hush-hush before Sanjay of AU Bank, his extension was in a sense considered by Reserve Bank of India. With ICICI Bank, it was just one of those concerns which were not there because Mr. Bakshi is turned the ship. Whether it is on the banking side, whether it is on the subsidiaries, or the way how some of their entire liability franchise is now moving, and shareholders are also mighty excited because stock is not far away from its all-time high. But yes, a continuation of 3 years, which is important. Markets would appreciate that. But will this inject any bout of short covering or any kind of a re-rating in the stock? I don't think so. And it's like the Aditya Puri era. You knew that he will get an extension for the good work he was doing. That was never a concern. That was never a trigger, or that was never a tail or a headwind, so to speak. So for me, this is more like a routine which shareholder expected, given the kind of great franchise what he's done. So can this be a price moving factor for the stock in the short term? I don't think so.
Well, power continues a buzz. Couple of fresh brokerage notes, Anisha.
Yes, couple of fresh brokerage notes, but the reason is that overnight, of course, we saw those big announcements happening with Saudi as well, wherein they have signed multiple MOUs for energy corporation, and just gives a fillip to the entire space because the brokerages are talking about the same stuff in terms of how the energy usage is likely to go up, how there's a bit of a dearth of coal as well, and how renewables is likely to do better. So that really continues, but they have signed the MOUs in terms of investments in renewables, so that's important. They'll also be doing bilateral investments as well as technology transfer. It will remain in effect for 5 years, and there's a transnational grid connectivity plan also which is in place between India and Saudi Arabia. So that is in progress as of now. Even if you look at what's happening back home, the prices have normalized a bit. Last month we had seen that the IEX clearing price was as high as 7 rupees. It's now come down to 4.95. So that being said, I think power is a long-term story, because when I was talking to the management of Siemens as well, they said given the kind of growth rate we are seeing, he wouldn't be surprised that if India is able to double its energy usage in the next few years itself. That tells you the kind of bull run we are in for the power sector.
So we've discussed this one before. I mean, you're going through this unique situation where in the short term there is going to be more demand and less supply. And I think if you look at the stocks where the whole flywheel effect seems to be happening, it is evident in the way how merchant power dominated companies are moving, how NTPC is moving, how Navy Lignite is moving. So I think this is more like a multi-year trend now, so to speak. We'll have a separate discussion on where and how and which part of the power you need to really align to. But for me, I think in the short term, when I say short term, 3 to 6 months, 6 to 9 months, I think go for companies which have a high exposure to merchant power. The move has already started in Adani Power yesterday or in JSW Energy a couple of days ago. I will not be surprised that if that move only accelerates further.
Okay, that's the view coming in on par. Never getting tired of talking about that entire space, and ditto when it comes to the entire railway space, Anisha.
Oh, well, yes, just wanted to highlight the kind of delivery data that we have got for railways. Let's just put that into perspective as well, because that's what we are talking about, that for railways, that really rally continues. There wasn't any incremental news flow apart from the G20 deal that has happened on infrastructure and connectivity. But just to put the data in perspective in terms of delivery, they continue to be quite high. All these stocks were getting delivery of almost 1.5 to 2x. So that's the other space we are watching out for.
All right, thanks very much, Anisha, for dropping in and giving us all of those stocks to keep on your radar. Let's move right on then and focus in on what the top experts have to say and commenting on the entry of Geofinance in the sector. Bajaj Finserv's Chairman Managing Director Sanjeev Bajaj actually downplayed concerns of the increasing competition. In fact, he said that India needs many more financial companies. Hear him out.
Well, we know nothing about Jio's plans, and hence very difficult to comment on that. But they have a large base of customers. They have tremendous technology and digital strengths. And maybe we have an overlap of some customers. We are ourselves there financing in some of their stores. It's a very small percentage of business for us, but we are there. I believe that there will be opportunities to collaborate. There will be opportunities to compete. But India needs 10 more Bajaj Finances. We need 10 more HDFC banks. In 2001, there were 5 insurance companies, all government owned. The total market was 20,000 crores. That was the annual insurance premium. That market in 20 years, with now 60 players and the insurance regulator wanting to open up to even more, but 60 players has taken that market from 20,000 crores annual premium in 2001 up 50 times in 20 years. That is what competition does.
Okay, Bajaj Finance clearly betting big on new car financing business as well. The company will soon be venturing into financing four-wheelers. In fact, we at ET now learned that they're also tied up with Maruti as well as Honda for this and may soon announce more partnerships. In fact, Ankur Mishra, my colleague, joins in with more details on the same.
Yes, Bajaj Finance is betting big on new car financing business. In fact, we understand that there has been tie-ups which has been made with car companies. Maruti Suzuki as well as Honda Cars has held partnership with Bajaj Finance, and this is for financing of new cars. We also understand that these kind of partnership may continue in future because the company wants to scale up new car financing business. The company also wants to scale up and venture into the new business of microfinance as well as tractor financing. Now, as far as the new car financing is concerned, we understand that the company will provide car loans of up to rupees 5 crore to customer, and these will be tailor-made solutions for the customer. The company will leverage on the technology front, and it will also offer flexi pay scheme to the customers, those who needs it. Apart from that, the company overall wants to increase its presence in cities, and if you talk about the market share, which is currently under 2%, the company wants to increase, in fact double it in next 4 to 5 years to around 4%.
Thanks for that. So that's clearly the view coming in from Bajaj Finance. And let's slip into a very quick break. Be right back. Lots more stocks in the spotlight.
Well, at 20K and at an all-time high on the Nifty. This morning, of course, the GIFT Nifty is once again indicating a mildly positive start. But it's good to see that level of 20,000. Most analysts expect that it's going to be 20,500 next. So let's see which way we actually head out from here. In fact, just last afternoon, there were celebrations which erupted at the National Stock Exchange as well on this momentous occasion. In fact, ET now also caught up with the NSE MD and CEO Ashish Kumar Chauhan as well to understand the mood and to understand the journey from this milestone to hopefully next.
20 times returns over 27 years is a phenomenal number by any stretch of imagination, and no other country, I think, has even in dollar terms given such returns. If you add the dividends and other things, probably it would be even higher to probably 20,000, which is what we call total returns index. But ultimately, this is what we do is reflect India's progress, right? The Nifty on its own you can't even figure out what it is. It's made of 50 companies, the top 50 companies, and some of them go out, some of them come in. But it shows India's collective progress over last 27 years, but probably for time to come. And that's where I see India has come a long way, but India has a longer way to go. So we have still just begun our journey. We have to work much harder as a society, as individuals, to collect that wealth, create that wealth.
The market has rallied very sharply this year. What are your messages for the investors?
Saying, yes, stay invested long term. Study well. Don't believe in tips. Don't get into derivatives if you are not experts. And if you can't study well for the companies, please go through experts like mutual funds or portfolio managers. But if you have to grow your wealth, stock markets have proved beyond doubt that they are better than any other asset class, be that gold, be that real estate, be that fixed deposits, and stay invested long term. And if India is going to grow, which I have no doubt about over the next 40, 50 years, India is going to give you much better returns in equities market than any other market.
All right, let's put the spotlight then on the markets and understand a little bit more about what this bull rampage means on D Street, where the markets could potentially be headed, what the outlook is when it comes to the broader markets too. Puranju Valiath is now joining us on the show, MD and Portfolio Manager, Equity Intelligence India. Puranju, thanks much for taking time out and joining in. How is it that you're celebrating this milestone moment? And tell us a little bit more about what the outlook is when it comes to the markets scaling up even further. What's next?
Yeah, I think it's a natural way for the market to move in India, which has been going on for a while. And, we are not celebrating anything, and I don't believe much in these benchmarks. Of course, it's something interesting, and we all celebrated it our own way. But Indian market, has a tremendous journey in the last few years. And it's shining very well in the global arena as an economy, as a market capitalization, and by all standards. It's something great news for India to celebrate. And this time, I strongly believe, it's a structural flavor for what's happening in the market. There are a lot of companies now. There is a feel that small and mid caps are overpriced, and a lot of market gurus feel it, and there is a point in that. We have seen it many times when there is an overheated market or when there is exuberance, beyond certain levels. It always tends to correct, but it's only a correction. Considering India's economy and the structure, it's a long way to go, and nothing is a peak here. And I think it's going to be great times ahead.
Puranju, is that a right assumption that there is exuberance now building up in the small caps and micro caps?
Yes, I believe so, because this is quite natural, but it is not as bad as earlier cycles. We can be more comfortable about it because the structurally changing companies or the businesses or the promoters' attitude in the small and mid caps are so much evident. In the governance, in the transparency, there are many aspects to it. So, and the kind of opportunities, India is the only hope today in an otherwise troubled world. The way China has been declining, the kind of, it's not very stable. There are many challenges in China as an economy to grow much further. So that growth is going to happen in India. We have a fantastic opportunity, and our systems, our government, our economy is ready to take advantage of those opportunities. So that will definitely reflect, in many sectors. In manufacturing, we all talk about railways, the defense. There are so many aspects. India is very strong, and we are going to be much stronger in the global arena going forward. So our companies, not only the very large established companies or the mega caps and large caps, there are many small cap companies with fantastic visibility. So I would say, rather than getting bothered much about the exuberance, there are some companies which have gone much beyond its fundamentals or justifiable limit. I definitely agree. So that is where you have to do capital allocation. Not move to stocks or the businesses which are still available at very reasonable valuation, or there are stocks still underpriced, I strongly feel. So this people talking about small cap, mid cap, large cap, I don't have much belief in that. Now, for example, Aisha, you may be remembering, we have been talking last 2-3 years about Tata Communication, one stock. At the 2020, the COVID low, Tata Communication was a small cap stock. And by 2021, it became a mid cap stock. Today, Tata Communication at around 55,000 gross market cap, it's a large cap. So evolves. So we have a lot of smaller companies in India with the long highway of predictable growth. It's emerging. But at the same time, this exuberance, when it happens, there can be overall correction in the market. So broader market could correct anytime, but nobody knows when and how much.
How will you approach railway and defense stocks? Do you think these are stocks which, if you continue to stay with them, you will continue to multiply your wealth, or it is now time to not get greedy, but time to get choosy when it comes to railways and defense and shipyard companies?
Yeah, I can just see shipyard, Cochin
That's why I
shipyard
asked
from my
you.
window.
That is why I
Yeah.
asked you. You
Yeah.
preempted my question. I wish you could turn the camera and show it to us. You can actually see the shipyard from your house.
Oh, yes, right now.
So are they delivering
Anyway,
that ship, which they've been telling us? Can you tell me?
I had a privilege, while under construction to be on board of that Vikrant. It's an amazing company, but exuberance is very much evident, Nikunj, in my opinion, in these railway and defense companies. But again, I believe these companies are in that long haul movement, with a long runway. So so there can be, some of these great companies with great future, there can be correction, and it can price-wise correct 20-30%, or it can have a time-wise correction. Sometimes you have seen stocks doesn't move for 2 years and 5 years. So those kind of things will happen. So that is where that happens when there is that exuberance. So investors should be, this is a point of time to be very selective, looking at the valuations. I won't say just be bearish and sell off all your small and mid caps. I think it's a very wrong idea. We have got wonderful small cap and mid cap stocks to look for next 5, 10, and 20 years. So whenever you feel overheated, if you are in a short-term or mid-term kind of mood, or in a trading system, nothing wrong in booking profits.
Where have you booked profits, and where are you not planning to book profits? We've discussed some of your ideas, whether it is Tata Communication or for that matter Tata Consumer. Have you booked profits in any of the Tata group of names?
We have booked profits in Tata Tata Consumer and Tata Elxsi later. But in Tata Elxsi, we booked profit, very early, around 4,000 levels. Then it doubled from that level, but no regret. We have moved into Tata Communications since last 2-3 years, and we continue to hold. We don't mind a correction happening sometime by 10-15%. So even what we discussed, the Raymond. So we continue to hold, because I feel in this kind of a heated up market with exuberance in many pockets, there are companies which can there is a growth visibility, and it's not a very high unsustainable valuation today. And so there are very comfortable opportunities in small and mid caps, Nikunj. I strongly feel so. But suddenly markets correct and everything goes down for 1-2 weeks, I cannot rule it out. It is very much possible. That is how markets behave. Should be ready for that. Traders. For investors, there's nothing much to worry. If you feel your particular stock is too much overpriced, book profit.
Feeling when it comes to, other individual names like, say, a Shalimar Paints, etc., is the conviction looking strong over here?
No, I think you are mentioning from my holding. So this has been a PMS holding. We used to buy at very low price. We have book profits, except in our AIF holding. I think there is a change in management is happening. So there's nothing exciting about it at this point of time. People should watch and wait and watch. The other small stocks, somehow mostly they are in my personal portfolio. In PMS, a lot of people believe we buy penny stocks or small caps. It's not true. Now, Tata Communications, Raymond, and Hindware makes around 50% of our portfolio. These are very large businesses in India with the leadership. So that perception that Equity Intelligence, my firm, holds buys only small cap, it's not true. So as I told you, now a small cap Tata Communication has crossed mid cap and now it's large cap. So that is where you make multi-baggers. There are many such opportunities in the market. But looking at one more good thing happening in the market, most of the market participants have seen this 2008 crash and the exuberance and the reaction of the market later. Similarly, 2018. I am one of the fund managers who suffered maximum in the 2018 small mid cap meltdown.
I like that phrase of yours.
A lot of learnings have happened.
I like that phrase of yours. There are many mid cap stocks which can become large cap stocks and many small cap stocks which can become mid cap stocks. So let's hit the pause button here, and this is something which everybody wants to know, and you must have guessed my question. Which are the small caps which to your mind could become mid cap, and which are the mid caps which could become large cap, or which are the small caps which could become large caps? Small cap भी बहुत बड़ा हो सकता है ना?
Of course, that's happening in the market. But Nikunj, I am very sorry. I cannot mention names. I'm getting more and more, what do you call, cautious about mentioning names on thing. And for all good reasons, regulator also has made an environment. We should be more responsible on the media while mentioning stocks, especially small cap stocks make very big impact on the price just by mentioning it, because market is so crazy. There are a lot of new investors in the market. They are not willing to learn the fundamentals or understand the company or the future. Just jump into stocks when somebody mentions a name. We are in that kind of a period of time now. So I'm very, very scared, and please don't ask me individual names. But generally, I'm telling you, the pharmaceutical is a sector which we feel we have been, because it has been beaten down in the earlier cycle. So some of them are now coming up. But India manufacturing, we have got a strength as a nation, and we are manufacturing it for the whole world. So there are some well-managed companies. But one thing I'll tell you, whichever segment or group of companies, when we look at those companies which have some small negatives, and they have been very much underpriced. So if investors have that daring, and they want to invest directly in some of these small cap companies, look at their growth prospects, that long highway in terms of growth opportunities and market opportunity, market size in India or globally. So when we look in that manner, I find many small mid-cap pharmaceutical companies can grow much bigger and can be making in India for the whole world. And we have got a strength in that. And the weakness of China in many pockets, especially in manufacturing, I think it's going to be very big structural advantage and luck for many Indian companies who are established for decades and had many issues. And some companies in the past had governance issues. And many of those companies with the next generation coming in, they are very much learned people. There are all incentives for many promoters to stop siphoning off money, to go very professional about it, appoint a proper CEO and CFO, and run this company very ethically and smartly, and create market cap. So the promoter families' wealth creation should happen through market capitalization.
Sure.
This realization is coming in a big way to many companies.
Absolutely. But Parinju, just before we let you go, wanted to understand, you were talking about overheated pockets, and I'm going to keep it across market cap categories. Where do you think valuations are unjustified and getting frothy now?
I feel in the name of defense, there are some unworthy companies also going to very unsustainable levels, at least in the medium term. See, some of those companies can transform and come back to today's price after 2 years or 3 years. So there is no need of panicking, but you have to see the worthiness of the company, the promoter's quality, all are very important. Even though I talk many times, about some governance issues, and the stock is available at throwaway price, and why not take a chance? Especially in some people individually directly invest, provided you have to be very much watchful the behavior of the promoters later, or how do they consider the minority shareholders. All those aspects, there is no hard and fast rules. You have to use a lot of common sense and wisdom in doing these kind of things. Just please don't go by the tips in the market. I think it's very sad in that kind of a structurally big bull market also. I know a lot of people on tips, they have been trading and losing money. It's very difficult to lose money if you see in the last 3 years by investing in the market.
So Parinju, every time you come on television, it's a rarity. And when you speak about trends, you always oblige our viewers with a thought or a stock idea, whether it's multi-bagger or whether it's a compounder. I will leave it open. But give us something which could be an actionable money-making idea or an actionable trend which you would like to endorse for next 3 or 5 years. I'll keep it open. No market cap constraint, long-term, 3 to 5 years, where the risk could be 25 to 30%, volatility could be more, but 3 to 5 years, you think this could be a good compounder in making?
A lot of names coming to my mind. As I told you, it's difficult to really name them. But the two companies, the largest two holdings in our portfolio, that Tata Communications and Raymond. Raymond, as you know, it has moved from 3,000 crores to now around 14,000 crores market cap. I feel, peer comparison and the assets of the company, and there is some perception change happening in the governance of the company, and I think it has a long way to go. Promoters get motivated when market cap is created, and when minority shareholders like a business company and they start buying into that, and a proper or a more rational valuations comes to the picture, promoters get encouraged, they get motivated to do better things better, and to have more of governance practice. So those kind of comments. So in that context, I feel we continue to hold Raymond. I think it is underpriced. Similarly, in Tata Communications, we continue to hold all our stocks, and we have been buying even till very recently. I think yesterday it was at a new high. The stock was 200 rupees in the 2020 low. Now it's come to something like 1,900 rupees, around 55,000 gross market cap. The way the management guiding and in the con calls and all, they are very much excited about the future growth of the company. Even other than their legacy voice and data infrastructure business, the new verticals are emerging. They are going on a small acquisition free. Right. So this whether investors should think this is the value of the company, 55,000 crores. Whether it has a potential to go to 1 lakh and 2 lakh crores market cap in the coming years. Right. So that is the question every investor should think. Don't go by the, most people go by the ticker, price ticker. And still there are people, very highly educated people, instead of understanding the valuation market cap of the company and the business growth potential or the visibility, people just go by the price ticker. It's very, very bad. Especially the newcomers in the market should always think. It's a very easy thing. One need not be a CFA or a chartered accountant to understand these simple, things about companies' fundamentals to evaluate that. So I feel these two companies, investors can watch, but there can be corrections. We are ready for 10-15% correction in both the stocks. We continue to hold. I don't want to recommend it as a stock. So I'm just expressing about the stocks.
That's a disclosure.
Take care of that.
Okay, that's a disclosure. Really appreciate your time. Always, lovely to have you on ET Now. Thank you for joining us. And before I go to Pankaj Pandey, you want to look at the number of 20,000 and ask yourself that what's next. And when you ask yourself what's next, a year from now, 2 years from now, 3 years from now, this will just be a number. Actually, I still remember 2000 I started my television career. And forget the Nifty, the Sensex was at 4,000.
Wow.
And, Infosys had a quarterly PAT of about 60 crores. And today, the quarterly PAT of Infosys. Reliance quarterly PAT they're struggling to even make 1,000 crores on an annual basis. And look at now where they are clocking in terms of where the numbers are. SBI, I think for 2 quarters ago, had a reported PAT of 14,000 crore. And that is what is, the standout feature of a growing economy is that if an economy is growing, if you put all the right ingredients in terms of governance, in terms of productivity, in terms of efficiency, in terms of market dynamics, demographics, then stock market is just an interplay. Sometimes markets can overshoot and sometimes markets will catch up with the economy. We can argue about some stocks in some pockets where they've really overshot, but that does not nullify the magic what is happening in terms of where the India re-rating is happening. So if you just look outside the prism of flows, technicals, valuations for a minute and say that 3 years out, 5 years out, which are the businesses which would be relevant, which are the promoters which can scale up, and which are the businesses where great wealth could be created. Trust me, it's like a buffet.
Yeah.
It's not like the scarcity. It's actually like a buffet where you can choose what you want depending on your appetite.
Yeah. And, given where we are in 2020s, who know, by 2040 we would be looking back and saying the same thing that, in 2020s the Nifty was only at 20,000.
So Aisha, just think about it.
Who knows the capacity of what equity markets could do along with economy?
See, Aisha, just think about last 20 years, what all we've seen. We've seen a COVID crisis, which is recent. We've seen a 2008 crisis.
Yeah.
We've seen a circuit down in the market when the government, when the Bajpayee government had lost elections. Then we've seen taper tantrums. We've seen 9/11. We've seen assassinations. We've seen droughts in the world. We've seen famines across the world. Wars. Just about everything, whatever could go wrong has actually gone wrong. But the compounding what markets have given, I'm talking about benchmark index, from 3,000 to 60,000, and from a 3-digit Nifty, it is now at 20,000. That is the magic of compounding which happens. And the similar application can be done if you look at the prolonged history as to what's happened in US markets also. I think that should be the spirit, rather than saying, okay, 20,000 is the end or 21,000 is the end. That's all, near-term terminal value adjustment for analysts, and for technicals, it's about, getting the pit points in terms of the RSI and the other indicators. But ultimately, if you stretch the time frame, that is where the magic of compounding actually happens.
Yeah. And in fact, Kunal, I guess your investment in Tata Motors also would vouch for staying the course and reaping the benefits.
Well, yeah, absolutely. And, I think it's a valid point that, over a period of time, wealth gets created in stocks. Now, there will be phases where the stocks are overbought, oversold. But, if you tend to ride out those short-term, phases and aberrations as such, then I think long-term wealth would be created in a significant manner. We've seen so many examples. Now, I'll give an example of SAIL. I think in 2002, the stock was just 4 rupees, 4.5 when the first round of rally started for the stock. And by the end of the bull market in 2008, the stock was almost at 280 rupees. And in that process of 4 to 80, it was not a linear rise for the stock. There have been huge kind of corrections for the stock, a 30, 40, 50% swing into the stock prices. But then eventually, the stock managed to rise up higher. So just to give that as an example, I think there are a huge number of stocks which have created wealth over a period of time. And I think that's the message which I would probably echo with Nikunj.
Okay. Pankaj Pandey, good morning. How are you feeling this morning?
Good morning, Nikunj. Thanks for having me.
What are you telling your clients? Nifty 20,000. Ab kya hai iske baad?
So, Nikunj, on the Nifty, what we have been saying is that overall our target is 21,500, which is 19 times FY25 earnings. And possibly in some months, we would be incorporating FY26 numbers. So largely, overall earning trajectory for next 2-3 years is going to be 16.5 kind of a percent. So I think that is the kind of a return, a broader return, what one can expect in Nifty on a sort of an ongoing basis. But I think we have seen the market sort of rallying up, especially the mid-cap, small-cap space. I think the pace of rally is definitely surprising. So I think large caps are offering a lot more comfort from a risk-reward perspective compared to mid-caps and small-caps. But having said that, we still get stocks in the mid-cap and small-cap where we haven't seen the kind of appreciation, and possibly some of these names are still sort of looking good. But I think this is not a time to sort of exit market given the fact that we are sort of trading at rich valuation. I think one thing is very clear given the kind of inflows what we are seeing. It's too much money chasing few good stocks. So I think one should not really downtrade in terms of quality of stocks, and possibly which is why you may not really get stocks at a cheaper level. So I think in this kind of a overall broader rally, I think quality of stock is paramount. So I think that is where I think that holds the key, because we could keep getting correction in between or going forward also as well. But if you're holding a good quality stock, at least the ability to sort of buy at lower levels is definitely, or you get confidence to buy at lower levels. But it's good times, and our sense is that this is going to sort of persist for next 5-7 years. I think India is one of the few markets where growth is sort of confirmed, and rightly so also.
Give me a pocket where you think it's time to book profits, and give me a pocket where you think the best is yet to come. And we have a long way to go. When I say long way to go, not like a 10-15% move. A 50-60% move in 3 to 5 years cannot be ruled out.
So, Nikunj, I think when you sort of look at some of the pockets, for example, railways, I mean, we have this announcement of economic corridor. It's very difficult to sort of pencil in numbers for some of these counters. And with the kind of rally what we have seen, so probably that space looks a bit overheated. And then you could have individual stocks which can, where we are sort of liking is, say, for example, you look at PSU banks. I think PSU banks can still deliver good mid-teen kind of a growth. We recently recommended, say, Bank of India, where we expect that the ROAs could improve from 0.5 to 0.8. It is trading at 0.6. Mind you, in good times, some of these names have traded closer to 2-time book. So I think that is one space which is PSU Bank as a space is looking good. I think IT is also sort of, at least the tier 1 names are looking okay compared to the overall tier 2 names, because tier 2s have already sort of rallied up. Then I think there's some names on the logistics side. So we have been liking delivery for quite some time. I think if India has to evolve as a manufacturing hub overall, then logistics as a space has to sort of do well. Delivery is something which I've been liking. And then I think real estate as an overall pack can still deliver. It's coming out after 10 years of overall consolidation. So what we like is, say, something like Mahindra Lifespace, which is talking of 5x growth from current levels, or something like Brigade Enterprises, which has been sort of doing very well, does not carry much of a debt on the residential side. And then you have some names on the auto ancillary side which are sort of EV agnostic. On the large caps, I think something like L&T, Reliance, HDFC Bank, I think, or even consumption names like Titan are looking attractive to us.
Looking attractive there. In short while from now, we'll have Vijay Kedia as well join in and talk about what his take on the markets are. But let's just address some of the buzzers from yesterday. The Adani group of names, sure, after the promoter upping their stake in Adani Enterprises as well as Adani Ports, those set of stocks held out just very smartly. We've seen a significant addition to their market cap in yesterday's trading session alone. There was Glenmark, there was HDFC AMC, there was Canara Bank. All of these names held out very smartly indeed. And then, of course, there was the entire gamut of the banking names, right, Kunal? Everything from SBI to Axis charged ahead. But would you still pick out HDFC Bank, or would you bet big on maybe an SBI, Axis, or IndusInd for that matter?
I think it's going to be a mix of banking names which should do well. The reason for picking up HDFC Bank was possibly because the stock was a huge underperformer. So it just not just a 1%, 2% rise in HDFC Bank, but it's the perk up in terms of sentiment and the weightage it has in the Nifty and the Bank Nifty which matters the most. Now, there are far more better stocks in terms of the breakout candidates, like IndusInd Bank has already broken past about the 1400 levels. Axis Bank yesterday managed to cross the 1000 levels, I think, for the first time. So there are many better candidates in terms of a breakout which have already confirmed it way ahead than the large cap private sector names. But I think it's a matter of how the quality of the sector as well as the strength of the entire sector is, and I think that's the whole and soul of this rally for the markets.
Right, okay. We'll thank Pankaj Pandey on that note. We will get to Vijay Kedia in just seconds from now, so stay right there. But let me quickly get in some mid-cap trading ideas as well. Naresh, on your list?
That would be a buy on Biocon. That's a stock which has broken out yesterday. The stock has been a relative underperformer in the whole pharma space for a really long time now. The stock consolidated around this 250-270 mark for the last 3 months. And yesterday finally broke out above the 275 mark, which was the top over the last 3 months. And the longer term trend also seems to be changing. The stock has corrected from 480 levels. Expecting this to make a move towards 330 levels, 320, 330 levels in the short term, stop us at 269.
Kunal, what's your mid-cap radar this morning?
So I'm betting on PSU banking stocks. PNB is the stock which I would suggest as a buy. Excellent momentum, strong breakout for the stock as compared to many of the other PSU banking names. So target of 75, stop loss at 66.
Okay, let's welcome on board then Vijay Kedia, MD at Kedia Securities, joining in the show right now. But first, let's get our viewers a glimpse of his latest song, right, Nikunj? Let's start off on a musical note first.
Kideji, should we play the song or you want to? Okay.
सोच कर समझ कर इन्वेस्ट कर, रूमर पे टिप पे ना टाइम वेस्ट कर।
सोच कर समझ कर इन्वेस्ट कर, टिप पर इन्वेस्ट मत कर।
रूमर टिप पर टाइम मत वेस्ट कर।
So when people tell me that Vijay Kedia ji ये खरीद रहे हैं वो खरीद रहे हैं, we should not listen to that rumor. We should ask him only, right? That is the essence of the song. Yeah. When Mr. Kedia is on air, you should, rather than all the WhatsApp messages which keeps on going whether Mr. Kedia is buying it or selling it, you should not believe those WhatsApp messages. Wait for him to come on ET Now and ask him that what are you buying and selling. That's the essence of the message of the song.
Or the second message could be then listen to Nikunj Dalmia and Aisha Faridi and do whatever
we are in the business of asking questions. जवाब तो आपको देना पड़ेगा.
I am learning from you, bhai.
Okay, 20,000. What's next? 20,000 Nifty में हो गया. What is next now?
Same thing you would have asked me at 10,000 and 5,000. Not 20,000, not 25,000, not 30,000. ये तो karma है दोस्तों. It will keep on going. You remember, maybe I don't have the exact data, but maybe 20 years or 25 years back, where Sensex was at 20,000 something, maybe 20 years back now. Now Nifty is there. So obviously, we can say that Nifty is catching up with Sensex.
Mr. Kedia, ultimately markets will map economy and earnings. Sometimes markets may run ahead and the economy and earnings they catch up. Sometimes earnings they come out and then markets or stock prices they catch up. In this catch up phase or in this phase of sometimes markets they go first, sometimes earnings they follow, sometimes earnings they go up first and markets follow. Where are we right now? At the current juncture, how much of the good news is something what markets are pricing in?
I think all the good news are priced in the market. Okay, it is like mice and cats. Sometimes mice is ahead, sometimes cat is ahead. So it keeps on happening in the, sometimes we are chasing the economy, sometimes economy is chasing stock market or the prices. So I think all the good news, all the good news are there in the market. People know what is going to happen. Now it's not a secret. Okay, maybe 2 years back, maybe 90% people were skeptical. We don't know what is going to happen to the world market, how America is going to deal with the recession and all those things were there. Now I think cards are open. Now everybody is on the same boat, and that is the cause of worry in shorter term. I would say. So I think all the good news are there in price. That does not mean that market is going to fall today or tomorrow. This may continue for 1 month or maybe for 2 months, but of course it is not going to last forever.
But Vijay, the question on everyone's mind is, do you utilize this time to trim your portfolio or do you have that courage to buy afresh even at these levels? And are there any opportunities to buy in the market currently?
I'll tell you, I haven't sold any significant chunk of my shares, maybe little bit, 1-2% or maybe 5% here and there. That also to fulfill some other commitment. Ultimately, money is in the stocks only. So this is what my personal thing is, that I have never been in cash and I lose my sleep when I have cash in the bank. So I am always, kya bolte hai, phokatiya hai ki no money with me. So I am okay with this, but please try to understand that my vision, I am running a marathon. Okay, I am playing a test match. So if you are playing a 5-day test match, your mindset should be different than when you are playing 2020. And the players of test match, 5-day test match, cannot play 2020. They will be totally flop. And the player of 2020 cannot participate in 5-day test match. So my mindset is that whenever I buy any share, I don't have any price target. I don't have any time target. So for me, it does not matter whether 1,000 rupees shares have become 4,000 rupees or it has gone up 5 times, 10 times. As long as the story is intact, there is a quote of mine, chase the story behind the stocks, not money on the table. Money will make you rich, but the story will make you wealthy. So this is my philosophy, but everybody should not follow. First, know yourself that what is your mindset.
philosophy called smile. So first let's smile and let's use that investment philosophy to understand how are you using the smile philosophy right now.
The same way, the way I was using in 2022, same way I am using today. There is no a difference, a little bit of difference in my approach, in my thinking, or in my action. It is all the same. I don't get excited. Whenever some match is happening, some match is happening, this is the audience who cheers up. No, the players have to keep his mind calm and keep on playing on the pitch. So I'm excited, of course, because M2M is rising. Okay, but that is all right. So I am keeping myself calm. I'm not deviating from any of my principle, whether it's smile or laugh or whatever it is. I'm following the same principle. So this is what I'm doing, Nikunj.
Let's look at your top holdings. You said that you've not sold anything significant. So can I say your top 5 holdings where, and some of them that is in the public domain, Tejas, Atul Auto, Webhub Gems. You think that even though there is mid-cap stocks are trading at a multi-year high, you are convinced about the story or the earnings trajectory in your top 4-5 holdings?
You see, I am biased, okay, because I am holding all these shares. Patel, of course, is a new entrant, new shares. But I usually hold my shares for 5 years or 10 years, as you know. So I am convinced with my story. Maybe in some of the pocket, there is euphoria. Maybe in my shares also, there may be some euphoria. Usually, I don't take advantage of that euphoria, or usually I don't sell unless I need money for some other investments. So as you are talking about Elecon Engineering and whatever name you have said, I must have sold some shares that you will see in the September pattern, shareholding pattern. But to buy some other shares, my philosophy is very clear, Nikunj. I like and I am comfortable when I board a train, like if we can give an example in Mumbai local, like suppose if the train is started from Churchgate, I am comfortable if I board the train at Churchgate or maybe at Bombay Central. But I would not like to board a train, suppose if it is going from Churchgate to Borivali, I would not like to board the train at Andheri or at Kandivali, just to cover the one station. I would let the train go. So keeping that thing in mind, because that gives me mental, it keeps my mind calm. It gives me a good sleep, So in that process, I might have sold some shares to buy some other shares, which I feel may have started or maybe at the starting point from Churchgate or maybe from Bombay Central. I may go wrong, but this is what I'm doing.
Let's use that train journey example. I used to always ask the late great Rakesh Junwala on his example or train journey. So if this bull market indeed is a train journey, see one day, Mr. Kedia, the bull market will finish. What we need to perhaps understand is that how long this bull market will go on. So if this bull market is a train journey from Churchgate station to Kandivali, where has this bull market reached?
You see, what I'm doing, I'm fearing the train. Okay. My journey, my destination is not Borivali, from Churchgate to Borivali. That is not my destination. Maybe from Borivali, it's like bull market and bear market, one journey, okay, one phase of life, one phase of the market. But from Borivali, I will see for some other destination. So this is what I am doing. So for me, it is not a Purna Viram, it is not a full stop that I will sell all my shares and I will go back and do something else. This is my life. Okay, so this is my business. One thing I will tell you, Nikunj, I have realized one thing. This concept of bull market and bear market is all rubbish. Okay. I have written a poem also, so if your time will allow, I will recite it. There is no bull market and bear market. Treat it as a business. Tell me one thing, Atul Auto is not expanding, or any company for that matter is not expanding. Keeping your bull market and bear market in mind, yeah. How does it matter? Bull market, bear market is a phase of life. Okay, it's like Diwali to Diwali, sometimes Holi comes, sometimes Diwali comes. But we keep on going, no? So I think this concept has, in fact, confused the investors. That is why 90% of the new investors comes when there is excitement in the market or there is a so-called bull market. So that is a wrong concept. If you treat it as a business, then there is no bull market, then there is no bear market, then only stock market.
Hello, Mr. Kedia. Look forward to your next song once we hit the next milestone as well for the equity markets. And Atul Auto, you must be smiling year to year, 60% in the last 1 month or so. But that aside, I just wanted to get in your thoughts because you did say, that it's important to track the story. What about the story behind Vaibhav Global? What's your outlook given that this too is one of your holdings?
You see, story is very simple. Like Atul Auto has an EV story, which is going to play out, which has started playing out. Stock is expensive. Let me tell you, if you will study the balance sheet and financial numbers, does not support the current price. So I don't want to say anything else. And Vaibhav Global, as you had named, so they are into e-commerce company. Remember 2 years back, what had happened? Platform, or companies were selling at 100 copy, 200 copy, 80 copy, and without any earning also $1 billion evolution in Nasdaq and 5 billion and 10 billion and all those bullshit was happening in the market now. Now that is euphoria has cooled down, and this is what keep on happening in the market. So these story are e-commerce story. I haven't sold any shares of Vaibhav Global because I think story is yet to play out.
To the SME space. And I'm just referring to two investments you have again in the public domain, Affordable Robotics and Innovator Facade. What do you make of the price action in the SME space? Because suddenly in the SME space, companies are trading at P multiples of 50 plus and they're commanding market caps of 500 to 1000. Is there a issue in the price action in the SME space? Do you think that's more like a euphoric bubble which could prick?
Of course, it's a euphoria, no doubt about it. 100% it is euphoria. It is you can say that FOMO or whatever the terms we use in this market. So people are still fascinated about now penny stock and cheap stock and chota price ka stock. SME also, I think psychologically people treat at SME like a penny stock. I think so. SME is not a penny platform. Let me clarify this thing. I'm not saying that. But maybe that concept people have, the penny stock and concept. So that is a FOMO actually happening in this market. Valuation is quite high, no doubt about it. And the 50, 60, 70 PU ratio, no way it is going to maintain. Someday this euphoria is going to cool down. I don't know when it is going to happen. Maybe it will happen before Diwali or before December, but before election for sure.
Okay, we are about 50 seconds away from the market open. So maybe a quick answer to this one. When do you decide to sell? You said it is not price, it is not P multiple, it is not valuation. But ultimately a business can run out of its course, and great stocks, great companies also may not give you returns if price valuations become obese. How do you decide to sell or exit?
No, when I find that the story is over, that because like when I'm watching the movie, I don't stand I'm there till the last slide is running. When the story is over, then I will exit the stock, or the perception of the management changes, then I will exit the stock. Otherwise, let me tell you, like some people are biased. So that could be, maybe I'm doing something wrong. I don't know. For me, exiting a stock is, I don't know. It's a very difficult thing for me. I get stuck. I can't sell the stock until unless the story has changed. Then I will sell the stock. So this is my answer.
Stay with us. A day after Nifty touched 20,000, well, we are starting with the print of 20,000 plus on the Nifty. I think we'll have to really practice a lot to say 20,000 plus on the Nifty. We've always been using 18,000, 19,000. Now you've got to practice yourself. But yes, 20,000 on the Nifty is a reality. The market breadth, again, picture perfect, if I may use the word. And we've got Adani stocks, railway stocks, defense stocks. I want to look at banks because they did all the heavy lifting yesterday. So let's look at the mid-cap gainers and the mid-cap high flyers. Now that we've established benchmark indices. Railway stocks, one by one. Defense stocks, one by one. That includes HAL, BAL, Kochi Shipyard, Mazgaon Shipyard. So railway stocks are just chugging along as if there is just no tomorrow. So markets are off to another great start. 20,000 plus is a reality. And 20,000 plus is something which is now flashing on the ticker and something which got captured yesterday as a pure print. But some of the railway, shipyard companies are down just a little bit here and there, but that could be called as minor profit booking. So Mr. Kedia, The most exciting space, I'm not using the word euphoria or bubble. I don't know whether it's euphoria or bubble. I thought railway stocks should have not gone up like this the way have done, but they've done. I mean, who's to challenge the market? But in your understanding, and this is more like a advice to our viewers, because everybody is excited to own railway, defense and shipping stocks. What should one do now for those who own it?
I don't know what should they do. They should, but generally people, general public should understand what happened in 2000, I think 22. We discussed just now about this platform stocks. I think same kind of euphoria is happening in this PSUs stocks. Now PSUs is just buzzword, So every time people come in this market with a new theme, with a new dress and new concept, and ultimately that concept lasts for maybe 6 months or 1 year, or maybe 2 years sometime, and then they fizzle out. I'm not saying the story in those stocks are over. The story may play out maybe for a decade or so, but valuation is too high and there is euphoria in this market. I will not buy those shares, and this is what I can say.
Just curious then to get in your take as well, Vijay, as to what the outlook is when it comes to, the broader markets. Yes, you did discuss that a lot of good news does seem to be baked in, and that we are catching up when it comes to the Nifty. But from the March lows, there's been something like a 40% rally that we've seen for the mid and the small caps. Do you think that now the picture, the valuations here are looking a little bit stretched?
Maybe in some pockets, because whenever we are talking about mid and small cap, that means we are talking about 5,000 shares, 95% shares we are talking about. So there is no, one observation for all the sector. There are many stocks in mid caps could be, which are yet still cheap compared to, other mid cap shares. So that is the key thing in this market, to identify a diamond amongst coal. That is the process. That is the education. That is the research in this market. But overall, if you ask me, I would say that this mid cap and small caps are, of course, are not very cheap. One has to be very cautious. One has to be very careful. There are times when one has to be fearful. There are times one has to be careful. So I think this is the time, and when there is time when you are cheerful. So, of course, we are going through a cheerful phase, but of course, after cheer, there is fear.
Right, Mr. Kedia, lovely having you on board. Thank you so much for not only sharing your market gyan, but also serenading us on ET Now. Always good to connect with you.